Today's number, guys, is 2, as we've just witnessed one of the fastest crashes ever recorded when it comes to liquidating small-term hodlers. Yes, it looks like Wall Street has now entered the game across all markets, with the Nasdaq, S&P 500, Bitcoin, and many others falling to critical levels over the last week. And now that we are here, we have to ask ourselves the question, is there more to come? Well, in today's video, we'll answer that along with the data and, of course, the big Wall Street movements in options flow that may have us starting to realize there are some key points that we need to look at. And more importantly, we've got confluence across the board. So join us as we go through the special weekend edition of The Daily Show, where we cover everything that you need to know right now about these markets. See you soon, guys. This one is not to be missed. Well, welcome back everyone to The Daily Show. It's great to have you here. My name's Thomas Atkinson, and in today's video, we'll be taking a look at the macro, the data, and of course, what has Wall Street been up to? Some seriously sneaky business and confluence across the board. Now, first up, I want to say that, of course, excuse the mic quality today. I am traveling and everything will be back to normal tomorrow, but I had to get this video out on the weekend because, of course, we saw a massive sell-off, confluence across the board, and more importantly, I did get some information that I think you will enjoy to have shared with you today. So we'll got that going a little bit later in today's video. Let's start off with things here though, and these are the charts that have been making the rounds in terms of what I've seen shared with me and what I've seen people commenting on quite a lot. And the first one is the 4 horsemen versus the Mag 7. So this is back in the 1990s where we had basically Microsoft, Cisco, Dell, and Intel all going to 70 times earnings. Nowadays, we fast forward to the Mag 7 and we're looking at around 40 to 45 times earnings, depending, give or take, when we're at. And you can say, well, look, there's more room to grow. And I think that is an important fact, but also at the same time, remember each bubble, each type of rally is going to be quite different from the last one. So there are similarities and then there are differences. And I think that the PE ratio one is most likely a difference that we shouldn't really be considering. It is going to be more about the infrastructure spend and more about the debt in the markets. And remember, debt is starting to go up again, which initially is great for markets, and then eventually it gets worse. Now let's talk about whether this is normal. You can see here Blue Kurtic has gone through and shared this chart, and this is very similar to what we've discussed several times before. You guys know we love a good ZBT signal, and we had one back in April, May of this year, which made us incredibly bullish on these markets. And when you're looking at structure of all of them across the board, it's actually perfectly normal for the market to find weakness around this point and then strengthen usually into the end of the year. And remember, this comes with a lot of data around it, including the fact that Wall Street has actually been behind on this rally so far, and they had to kind of almost liquidate the way they've done so over the last week to possibly build positions into the end of the year. Now, in terms of the University of Michigan Consumer Sentiment Report, we know that any report you look at right now is going to show everyone saying that the market is terrible. Whether it's the AAII sentiment survey that we often use, that Michigan Reservice report, or any of the others, they're all going to come in pretty much extremely bearish. And you know what they say about when everyone is bearish and buying puts and running around the streets, often the markets will climb the wall of worry. Well, we found out that Goldman Sachs have gone through and looked at their prime book, and they found that the US infotech sector basically got capitulated on last week. So it may not seem like that big a sell-off, but actually this is a fairly big one when it comes to last Thursday, and it did lead into quite a lot of liquidations. And I think it's always important, and we talk about this on the channel, to watch for those liquidations, because when they occur, especially around key confluence zones, it tends to be a pretty good structural point to start looking at that buy the dip style scenario. Another thing we've been looking at now for the month to date, or at least the quarter to date so far, has been the rally in other sectors. So if you've been watching the channel for a while, you'd know that we've been talking about oil services, healthcare, utilities, and maybe just like markets that other people haven't been looking at. And it turns out if you look at the major market sectors, healthcare is actually now the best performer over that period, and utilities is the second best. And what they both have in common is they are defensive. Now, if these continue to outperform, and remember, there was a rate cut back in September, which we pay a lot of attention to, guys. Structure from rate cuts matters, especially the first 3 to 6 months. So if it's your first time here to the channel, and I do know there's a few new subscribers from the conference I was at, so thanks very much for joining on, guys, and anyone else that has come, then we need to look at this structure, because if we keep seeing defensives go well, that tells us that we are most likely now in late cycle. I remember we used this back in 2024 to really show that the market was probably still going to be bullish and pullbacks were most likely going to be bought. This time around, we're going to get some very good information over the next 3 months in particular. Now, the S&P 500 percentage of stocks with RSI below the 30, that has now just tipped over. Again, it's a signal generally of a bit of capitulation. And you'll notice here from this chart here from Seth Golden and Wall Street Courier that it often is a low point. And I think it's a very important read. Like, you know, with this indicator, it's not really that great by itself. But again, when you start to bring it in with other confluence reasons, like anything in trading and investing, and especially what we put into our courses, it's about building that host of evidence. And I spoke to a lot of people at this conference, and it was interesting how many people have woken up to the idea that you need, you know, you're basically like 7 different reads, and then you need enough of them stacked together. And I think that's really a testament to how smart retail traders and investors are getting, is that everybody's starting to put these pieces together, and you guys are realizing that, you know, blends like we use, which is TA, data, macro, blending it together, are actually very effective tools for all sorts of investing and trading. Now, let's have a look here at the VIX, because the VIX has spiked big time, and that is good, actually. You might think, well, that's quite bearish. Well, not if it actually does find bid and flow around the right key levels. In fact, now that we're through the horror zone, which is around 24, we don't want to be at 24, guys. That's not really very good for returns. When we did hit into a 28, it does generally say that things like better forward gains could be there. So actually a high VIX often can be considered kind of positive. Now, according to the market stats here over on X, you can see here again, when we look at that RSI read, which is one from before, not only do we see a good visual, but we also see a pretty good weekly stat figure. And do remember, we were 7 months up in a row for the NASDAQ. The 8th month is notoriously weak, and 3 weeks of that 8 months, guess what? Notoriously weak. So we're now coming into the 4th week, which is a good coin flip style week. So we're starting to build that potential for some structure to come in. We also know that when the VIX was up 4 consecutive weeks in a row, the S&P is within 5% of its all-time high, which of course it has been. Then again, you might say, oh, we're losing structure. Well, not just yet. As you'll see on the charts, confluence is still there. And one of the main reasons confluence is there, guys, is because earnings is so decent. I mean, yes, Wall Street's consensus, it looks like, isn't exactly like super over the moon for anything, but we are consistently hitting the earnings where it counts. And what's going to continue to happen, at least in my belief, is if earnings are met, we're probably going to see structure continue to go well for those stocks. And if they miss, they're going to get brutalized. And that was the trend we saw this earnings season, which isn't over, but obviously it's getting near the end now. And the reason why that's so important to look at is the way the market reacts to especially the first 2 weeks in structure often can then be traded from that point on. Another one is oil prices. You can see here Tavi Costa has gone through and done oil prices adjusted for money supply. And I tend to agree with him. You know, I've argued for a long time that oil is historically cheap, and you can say, well, you know, it's geopolitical and everything else like that. Yes, it is. And oil is a very dangerous trade if you don't get it right and don't get the right timing and flow. But clearly there's been something going on in the stock world, because when you have a look at the stocks and you look at kind of what's going on, and we've got the chart here, we had, of course, gold miners go first. You guys know we're super bullish gold, have been for a long time. And then we went, of course, silver, platinum, palladium, recently copper, iron, especially in our private community. Links in the description down below for that one. And what we found was that you know, of course, there's a flow-on effect. And recently we've been pretty big on oil services. And there's a reason, because they've been improving on the charts. And again, if flow is improving, why would we not consider it? At least consider it. You know, of course, there are risks and everything, but at least consider it. So is this the next sector to go? Oil, the one that no one has liked for a long time. Well, of course, it now is getting discussion since it's picked up, and we'll continue to track it on the channel, as I think it is an interesting story. Let's get into probably the biggest story right now, though, which is Bitcoin. And there is no doubt that this is possibly the most interesting chart going around at the moment. And the reason why it's the most interesting chart, it's the one that's kind of been in free fall. I was just recently at the Australian Crypto Conference and met some great people there. And it was shout out to everyone there. And Dom particularly, love Dom. And from CoinJar is a great guy. And basically, the thing that I was getting at is no one was freaked out. I was really surprised. But there was something to take away from all of this. Nobody wanted to talk about anything but Bitcoin and a little bit of Ethereum. And I'm not kidding you. It was Bitcoin, 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 Bitcoin. From what I understand is that at these conferences, especially last year, no one wanted to talk about Bitcoin. They're all willing to talk about some of the other ones. Well, of course, Bitcoin always comes up, but you know what I mean? Like, it was a difference. There was the altcoins. No one really wanted to even go into it. The big coins, though, everybody was going on about Bitcoin. So no one seemed phased. And that kind of was interesting because, yes, everyone should be aware if you've been hodling Bitcoin for a long time that you can go through 80% crypto winters, and everyone knows that kind of percentage is possible. But yeah, this fall is actually quite significant. 126K down to 80,000 is not an insignificant drop. It does happen, as you can see here in rallies sometimes, and it's not an inconsistent drop that we've seen before, but no one really was panicking. So why I think this is important is I feel like a lot of people there had been in the markets for a long time. In fact, I almost spoke to no one that had not been there since around 2017 to 2020. So they've gone through the winter before. So what this market may have done is it may have gone to blow up really short-term positions. So the second largest short-term holder capitulation in Bitcoin history here, according to Check on Chain. And this is a big deal because, of course, this is liquidating the smallest traders, the ones that have just gotten in recently. And it does line up with quite a lot of the data that we've been seeing. Bitcoin exchange outflow, so that's a freak out in terms of exchange outflow, just hit a new all-time high. Again, this is usually a pretty decent sign either of a massive rally that's about to income or a capitulation low. And I think it's a good chart here from, funnily enough, it's Gordon Gecko on X, which is hilarious. But anyway, we've got Gordon Gecko there sharing that chart. You know, if you know, you know, yeah? And basically that one is a pretty good chart because what it's showing us is, of course, liquidations did occur. Then, of course, we get this chart here from Charles Edwards, and we've shared several charts of this. You can actually trade or like get indicators to put this on your charts, and I think we've got one's BTC production cost, and basically it's come back to the production cost here. So you can kind of see this is actually not a bad buy entry, and we've used it before. We've used it many times before, actually, especially over here back in the crypto winter, where we argued that, of course, if we went too far under production cost, that it wouldn't really make sense to necessarily stay there for too long. And here we actually hit it again. So it's another kind of level of confluence that we're starting to get on this market. On top of all that confluence, shorts are everywhere now. So the most popular trade, at least in trading terms, has been now to short Bitcoin. And why not? You know, it's been losing structure, and of course it's been making a series of lower highs and lower lows. And I think the key here is it's all lower highs and lower lows. We will share more liquidity charts if you enjoy this stuff over the next couple of videos, because I think it's going to be very important to if we get a squeeze or not. But that does show there is squeeze potential should the markets have a massive rebound. Another one is, of course, Bitcoin is oversold based on its RSI. Now, this alone I would never buy, but you can see that, you know, based on at least this read, it has been temporary purchases. And this is possibly what you still get, like a temporary relief rally. But it does seem positive that we've got these confluences across the board. And then the question came up a lot of times on the weekend is, you know, why are we down? Why is this happening? And of course, there are many different arguments for why it's happening. But I think what's probably pretty clear is now that Wall Street's involved, ETFs are involved, option flow is everywhere, which you guys know we track daily here. All of these things have really changed the cycle, changed the game. Everyone's aware of it. So if you go to the first, the second, yes, there was a cycle. Everyone became, well, a lot of people became aware, and the third one became a self-fulfilling prophecy. This time around, often it breaks. And that's why we're seeing a totally different, you know, movement in structure towards all of this. I did also want to mention that another thing that's been coming up is everyone's just mentioning the word data center a lot, and anything to do with kind of, you know, AI, and that's still a big topic that I saw going around. AI attached to anything you can think of. and just put AI onto just a normal code, and suddenly it's it's magical. This is really fueling, again, this data center spend. So remember, the private debt and company debt in general is expanding at this stage. We also have some more earnings this week. Speaking of AI, we've got a little bit of Dell coming through, so they might be selling some hardware, but probably the big one this week is going to be Barber. So we'll see how that Chinese stock holds up. All right, let's jump into the charts. Then we'll look at the options. Then we'll look at the big lead indicators in the other charts and see the confluence across the board. Straight up, S&P hit our level, and it nailed it, guys. Boom, right into 65.30 area, and that is exactly what we want to see. And this might be a bad mic quality today, but I'm telling you what, that is a beautiful hit. And why it's beautiful is because you know, I know, we all know this particular moving average on the first touch anyway often does give at least a little bit of a rally. And I think at the time of this recording, we've even got some futures up. So this is the first level of confluence. The S&P hit that level. Here are the options high and lows. Obviously, from a structure standpoint, you might say, well, Tom, that ain't out of the weakness yet. The small structure, if we're talking like 5-minute, 10-minute charts, that actually did bounce off the zone well. It's a pretty good day trade actually on the high break there. So well done if you're in that. But we do know this is a major support. We do know where this alert is, about 6,800, that we've got this major resistance. And of course, we're going to have to be watching that very closely. And you'll see as the options start flowing through this week that we'll start to get some updates here. But why did we feel comfortable that 65 would be hit and then find support? Remember, last week we had so many, or this week, I guess for some of you in the world, we had so many options sitting at that zone. So it was a really strong level. Like, it was a mass expiration, obviously an OPEX. And now what we do is we move into a week where there are still a lot of puts. 65.50 seems to have a lot here for Monday, but also 66, which kind of strengthens the game to, push above 66 and hold there, because Wall Street may not want to pay that. They may not want to go negative gamma on the event. I think the options will become clearer after we get Monday, but some good signs there of confluence on that weekly 20. And again, it just shows you those bounces do come through. For Tesla, it looks like all roads lead to 385, which we've been talking about, and 380, 385 is where the puts are at this stage. So look for structure around here. We'll check the charts out in a moment. And NVIDIA, it's pretty boring on the charts. 200 is the call level. We're currently on support, but we're not really seeing that huge amount of puts that we generally see come through. Where we do see puts, though, is in the IBIT options. So this is the Bitcoin options, and they're sitting at around 49. Now, this is actually slightly underpriced, so it kind of signifies to me that maybe the market will try to hold above that price and push up a little bit, and I think that's what's happened over the weekend so far. So we're actually seeing the market rally a little bit, which we'll look at soon, and Bitcoin has been holding, I would say, okay, considering its capitulation to, of course, 80K, but ultimately hitting that 84,000 where we thought there would be a lot of liquidation. And now we know with the data that yes, small traders have been massively liquidated. Hopefully it wasn't you guys. Let's have a look here at gold. You guys can see nothing much going on in the gold options that makes us get edge, so we just track it there. And onto the bonds indicator here, no break of major resistance. So we often had to pump the brakes there. We didn't see a full panic. If we do see this breakthrough, we lose the weekly 20 on the S&P. That's going to be, of course, a confluence of problem zones. We also saw VIX kind of hit into that spike high of 28 and then sell off from there. So again, that's a good sign potentially for the bid buyer. So not too bad in that area. And US dollar has continued to strengthen up, which of course has been one of our contrarian plays recently. And we often say if it's in the press, it's in the price. This is a perfect scenario of starting to believe in that concept, because obviously this is what happens when it becomes a crowded trade. Remember, just 4 months ago, the biggest storyline was the end of the US dollar. And now suddenly the dollar has found some buy pressure. Now, from a TA perspective, it could go into the 101.5s, we think. So that's a pretty strong level. And yeah, it's looking okay. Now, how's that taking an effect on one of our favorite asset classes, gold? Well, we know gold has to have a sleep. Why? It moved too quickly, too fast. It's very common for it to move in a sideways action for 1 to 2 months. It's now been over a month, so that's okay. And I don't really see any problem with gold at this point. And you can actually see here, we were talking about structure of potential in this market, like as in around this area, find bidders. Well, it kind of did. It's still sitting in the exact same zone. It hasn't broken a 41.20. So you've kind of got like a small structural change potentially. I'm very interested in what happens here. And if, of course, we drop this level, very interested down in these levels. So particularly at that point, we'll be looking at weekly 20s as well as being a possibility. For silver, it's just sitting. So we'll revisit that. And oil has been weak for the barrel. And you can see here that 63 remains that main resistance that we need to broken out. So we're going to need a difference between Brent, US oil, and obviously we'll be watching oil stocks in particular for breakouts. So we'll check that flow, and I think one of them is going to give us some extra edge at some point, so we'll watch it. For Tesla, we came back down to support, 385. We know that's exactly where the puts are. So what's going to happen? We're going to find pressure buying there. If we drop that position, I think we could be going down into this area here with the gap fills and such. So we could be going into that 340, 350 area. So Tesla is in a current selling market. As you can see here, we lost the top. We were bullish, of course, in structure. We dropped this level. It was over at that point. So we have to, therefore, really either wait for a 430 plus, or if it keeps going down, then, which it currently looks like it will, then it's going to 350, it looks like, from 385 break to the blow. Nvidia holding by a thread. Semiconductors barely holding up. You guys know this is a very important level for Nvidia. It's also a weekly 20, which you're going to hear a lot because confluence across the board has happened. And if Wall Street's going to bid, this is generally an area where you will see a bid come through. And I think this is a cool chart as well, which is the equal weighted NASDAQ. And you can see here, like we do with the equal weighted S&P in a second, they both hit support. So we've got here an extremely good hit right at the level you'd expect it to, and an extremely good hit here on RSP. So exactly where you would expect it to find buyers, and it did. And we spoke about this chart. So what are we looking for? Well, we're looking for the sequence of a nice bid, and then of course for it to actually break structure towards the upside. And I think even here with RSP, if it opens up a little bit better today, gets through 187, let's say, it's actually putting in place the building blocks of potentially a bit of a bid buy. So this doesn't at this point look like that scary when you're looking at these charts, because it has hit confluence. Now, what may be a little bit more scary is some of the single stocks. Oracle, probably, this is an absolute case of if it's in the press, it's in the price, hits that thing, Larry Ellison or whatever, becomes like the richest dude in the world, makes like 30% in a day, 150 billion or something in a day, some absolutely unbelievable money. And then, of course, the stock struggles and comes back down. We've now hit a 61.8, so golden fib of the entire run up. And I guess this is a pretty important level to be, focused in on, but no bid yet. So that's one of the big ones falling. Another one that I get asked a lot about, and I'm sure we'll cover it a little bit on Monday Open, is going to be Meta. And yeah, it's sitting at a gap fill, it's sitting at a fib, it's sitting at an anchored VWAP, depending on which ones you're taking. It's sitting at some level of confluence. However, there's no bid. So what that means is that the price has not actually gone and changed structure. So we often say it's better to be patient around these areas. We have also got a large trade that's coming in here. So yes, they're down a little right now, but remember, they don't trade with stop losses. So in this case, it's still at a very interesting level. So certainly a market that I'm sure people are watching. And then of course the Chinese stocks came down to critical support, major, hit it, bounced a little bit. Again, it's the story we're seeing right now. And the NASDAQ did something similar, where we can see here it went down, major support, bounced, absolutely not out of problems, 25,300. We break above that, big deal. That S&P level we looked at before, huge deal. That's going to be where you really know the market wants to try to go for that new all-time high. At this point, it is just a fantastic zone because it's been a consistent one that we often do see hit across the board. Obviously, practice risk caution, guys. Make sure that you know your risks, go into things. Nothing is for certain, but it certainly is a very interesting level. Now, let's have a look here at the old Bitcoin. So whenever you do Bitcoin, you want to do log charts, and excuse the fact that there's all these lines here for a second, but basically the one you're looking at is this trend line, which we dropped last week, and you might say, well, that's bad. Yeah, it's bad, but look where the weekly close is going to happen. This is actually pretty interesting and pretty important. It's wicked below. It's liquidated those 83Ks that were there. It hasn't hit, super pressure, which is 78, or a white low, 74 kind of level. But what we did see is the second largest liquidation of short-term hodlers. We saw huge capitulation across the board for people that have just entered into the market. And although I didn't get the sense that anyone was really panicked, what I did get the sense was nobody wanted to talk about altcoins. So it is actually the same as the stock market. A lot of people don't want to talk about anything other than the main kind of 10 or 30 stocks. This is becoming a concentrated market. And that actually is a worry, because what that tells us is it's similar to every other time. It's similar to the Asian crisis period. It's similar to what happened in, of course, the Japanese markets. It's similar to what happened in the dot-com boom, and similar to what happened in the Nifty 50 back in the day. So yeah, it's a little worrying that we're going to so much confidence just in a few positions, and I expect this concentration to really be a work of the ETFs. So we've already talked about it before. If you're interested, we've done plenty of videos, but also subscribe. It's a story that I think will be evolving for us over time. Another one is, of course, Ethereum. Ethereum didn't really hit anything major, kind of came down to a big trade level, but again, not that much bid on that one. So it's going to be almighty Bitcoin that matters. If we want to talk about the levels that matter for Bitcoin, it's really going to be this alert level I've got here at 96. I think also it's a pretty key level at 94, and it needs to kind of hold here for the close so it can kind of get that trend line and hold it for the wick. Is everything all green, all good for this market? Not yet, but it is certainly a first very small sign of the potential here of capitulation. And do remember, we saw dark pools at exactly this level as well. So we started to get big ones that have come in around here, and that's pretty good sign that markets often are starting to find some level of stability. For this week ahead, guys, we've got a whole bunch of information, but really the main thing that you're going to be wanting to look at, bit of PPI here on Wednesday, and realistically core PCE price on Thursday. And I don't like the word tentative. I hate that stuff. Like when we get into tentative markets, it's annoying. It is a bit of a shorter week this week, so of course, with Black Friday, Thanksgiving, I hope for everyone out there that does that, obviously the American audience out there, I hope you have a fantastic time with your family and friends. We'll be making videos into it anyway, and I'm a bit jealous. I kind of want to eat one of those delicious turkeys right now. Guys, if you enjoyed today's video, make sure to subscribe, smash that alert button down below, and obviously check out our Black Friday sale now live on our website, fxevolution.com. And yes, follow me on LinkedIn as well, Thomas Atkinson, and of course check us out on X as well. It's fantastic to be in markets because it's such an interesting time. It's great to meet so many of you out there. I always enjoy this. I'm looking forward to coming around the world again, and especially meeting our international audience. And don't worry, guys, if you've checked that Twitter, you'll notice the location is correct. It's Melbourne, Australia. Catch you for now. See you, everyone.